warehousing under customs, that is our next segment, segment 30. In this warehousing under customs, so we have to see some points related to that. So first we will look into the bird's eye view into this warehousing provisions. You can see there page number 271. So as soon as the goods are imported, those goods imported will be kept under the custodian for a period of 30 days, either in the port or airport, and we need to file inbound bill of entry for depositing the goods into the warehouse. And once we file inbound bill of entry or bill of entry for warehousing, we need to execute a bond also. What is the value for which we need to execute the bond? 3 times the customs duty payable. So cleared without payment of duty, bond needs to be executed. To which place we can take? Either to a public warehouse, private warehouse, or a special warehouse. And public warehouse, private warehouse, special warehouse, all 3 warehouses are licensed by principal commissioner or commissioner. Public warehouse, private warehouse will have records based control, but special warehouse will have physical control. If the goods belonging to any person can be deposited, that is a public warehouse. Goods belonging only to license holder means private warehouse. Notified goods belonging to any person, special warehouse. What are those notified goods? You don't have to remember those notified goods, that is not there in syllabus. Then next, suppose what is the period for which these goods can be deposited in warehouse? If it is EOU, EHTP, STP, or a private warehouse where the manufacturing operations are permitted, there is no time limit, means you can deposit for indefinite time period, and whenever you are clearing you need to pay the customs duty. And interest, no, interest also shall not arise. In case of others, they can deposit the goods in the warehouse for a period of 1 year. In that 1 year also 90 days will be, both 1 year and 90 days should be from warehousing order. So from warehousing order 1 year they can deposit, and warehousing order 90 days will be interest free period. 91st day onwards they need to pay the interest. They can carry out manufacturing and other operations in the warehouse, and for that they need to take the permission, and thereafter from the warehouse for what purpose it can be cleared, either to another warehouse or for importer's place or for export. If it is cleared for another warehouse, they don't have to file any bill of entry, but just a transfer request they need to make, and already initially one bond is executed, that will be valid. Customs duty not payable and the bond will be retained. So again 1 year we will get no, all the warehouses cumulatively 1 year only, okay. Then it can be taken to importer's place, but for taking it to importer's place they need to file one bill of entry, that is ex-bond bill of entry for home consumption. Whether they need to pay duty, of course they need to pay duty. Upon payment of duty the bond executed shall be released. There are 2 cases here, Supreme Court cases, Kesoram Rayan case and SBEC Sugars case. What does these 2 cases says? If the goods are not cleared within the permissible warehousing period, concentrate, if the goods are not cleared within the permissible warehousing period, on expiry of permissible warehousing period, the goods are deemed to be improperly cleared and we should have paid the customs duty. So therefore, don't take the ex-bond bill of entry date. Usually we need to take ex-bond bill of entry date for determining rate of duty. But in case when the warehousing period expires, so on expiry of warehousing period, whatever rate is there, that itself will be taken. We should not take ex-bond bill of entry. That is one important point. But for interest computation, we will take till the time we actually pay. So goods are deemed to be removed only for computation of customs duty, but for interest computation it is not deemed to be removed. For interest computation, till the time you are actually paying the customs duty, we need to compute interest, okay. That is this. Goods deemed to be improperly cleared on expiry of warehousing period, this is only for computation of customs duty. Then it can be also taken for export, and whether we need to file any bill of entry, no bill of entry, but a shipping bill needs to be filed because it is taken for export. Whether any customs duty payable, no, because imported goods kept in the warehouse and it is exported, so customs duty not payable, and the bond will be retained, okay. So why bond will be retained? So 1 second. So customs duty not payable, bond actually will be released, no bill of entry, but a shipping bill to be filed. Customs duty not payable, bond will be released. Actually bond will be released, kindly make the change, bond will be released, it will not be retained, bond will be released. And whenever we are making export, because we don't have the customs duty payable, customs duty itself is not payable, so the bond will be released. Initially at the time of deposit we have executed a bond, that will be released. And what are the rights with respect to the owner? So they can do inspection of goods, they can sort the goods, they can show them for sale. But whenever they are doing this, they need to ensure that proper caution is exercised, because if there is any negligence on the part of the importer, and because of that negligence, if the goods are damaged, they will not get the abatement, okay. So caution to be exercised to prevent loss, deterioration and damage. When goods are cleared after warehousing period, relevant date for determining rate of duty shall be taken on expiry of warehousing period and not ex-bond bill of entry is filed. That is this Kesoram Rayan and SBEC Sugars case. Now you can see some points in this regard. So come back to previous page, page 269. Imported goods can be kept in warehouse without payment of duty, and that is a warehouse licensed by Customs Department. Types of warehouse: public, private and special warehouse. In public warehouse, goods belonging to any person can be deposited. In private, only goods belonging to licensee can be deposited. Only notified goods not required for exam can be deposited in special warehouse. And the difference between public, private and special is that public, private will be under records based control, but special warehouse will be under customs lock. And if the warehouse license is cancelled, can the cancel the license? Yes, if the warehousing conditions are not fulfilled by the licensee. So on account of breach of condition by the license holder, goods deposited in such warehouse should be transferred to another warehouse or cleared for home consumption. What is the time limit within which they need to do that? Within 7 days from the date on which cancellation order is served. Of course, they will give an opportunity of being heard before serving the cancellation order. And warehousing bond is required for deposit, which is of two types: consignment bond and general bond. If it is consignment bond, every time we need to deposit, we need to execute, that is 3 times the duty payable at the time of deposit, whereas general bond is as specified by the officer. And warehousing bond plus prescribed security. So consignment bond thrice the amount of duty assessed, whereas general bond as and when, like in a year like that, we need to execute that bond as specified by the officer, and they have to furnish the bond and give security for transferring goods from one warehouse to another warehouse without payment of customs duty. Upon execution of the bond, officer shall pass the warehousing order. That order is relevant for the purpose of counting 1 year and 90 days, and warehousing period 1 year. Can this 1 year be reduced? Yes. If the goods are perishable in nature, etc., considering the shelf life of the goods, they can reduce. Considering the nature of goods, it may be reduced or enhanced. The period is not applicable for EOU, EHTP, STP and warehousing where manufacturing operations are permitted. And interest will be payable at what rate? At the rate of 15% per annum. From which date? 91st day after the date of warehousing order till the date of actual clearance and payment of customs duty. And can we do manufacturing operations in the warehouse? Yes, that will be permitted. And customs duty payable or not payable on those warehoused goods which are processed, but on the waste and scrap. On the waste and scrap, we need to pay customs duty. For example, say this, that is, we are importing some 1000 kgs. Say we are importing 1000 kgs. This 1000 kgs of steel is imported, and the rate of duty applicable to this steel is 12%, and this steel we converted into utensils. Okay, while converting it into utensils, 980 kgs of utensils like spoons, cups, etc. we have made, and the rate applicable to these utensils is somewhere like 14%. Then out of this we have got some waste and scrap. So what is that? Waste and scrap. Waste and scrap quantity is what? Waste and scrap quantity is 20 kgs. So 1000 kgs, 980 kgs is into utensils. So 20 kgs. 20 kgs of what? Steel. 20 kgs of steel is in the form of waste and scrap. But what is the rate applicable to this waste and scrap? Say the rate applicable to waste and scrap will be 5%. Now, what is the treatment applicable to this waste and scrap? Two treatments are there. Number one, either destroy it. Either destroy it. When you destroy it, customs duty payable or customs duty not payable? Customs duty not payable. Destroyed, customs duty not payable. Customs duty not payable on 20 kgs of steel. Okay. What about this 980 kgs? What we are doing with this 980 kgs? This 980 kgs is exported. This 980 kgs is exported. Okay. Now what they are telling, waste and scrap 20 kgs of steel is there na. Either you destroy it. When you destroy it, customs duty not payable, or another alternative is there. So cleared for home consumption. Cleared for home consumption upon payment of customs duty. Okay. Upon payment of customs duty. At what rate? At what rate? 12% or 5% or 14%? 5%. At the rate of 5%. Neither 14% nor 12%, but at the rate of 5%. At the rate applicable to waste and scrap, we need to. Okay. So that is with respect to this. And what happens in the same scenario if the goods are not exported but it is cleared for home consumption? When it is cleared for home consumption, okay. So you can see here, rather than exported, suppose if it is cleared for home consumption, then these options will not be available. These options will not be available if it is for home consumption. Okay, if it is for home consumption, these utensils are for home consumption, then in that case we need to pay customs duty, on 1000 kgs, 1000 kgs. So even this waste and scrap is also for home consumption. You understood? Waste and scrap is also for home consumption, and pay customs duty on 1000 kgs. What is the 1000 kgs? 980 kgs as well as 20 kgs. Pay customs duty on 1000 kgs at what rate? At 12%. Neither 14% nor 5%, at 12%, as if the steel is being imported. As if the steel is being imported. Now suppose, for example, if the steel is 14%, if the steel is 14% and these utensils is somewhere like 12%, then we need to pay customs duty at what rate? At what rate? 14%. Now logically, if you see, directly if I import utensils, I will pay only 12%. Directly for import utensils, I will pay 12%. So therefore, why should I pay 14%? For that reason, whether they have power to reduce, yes, they have power to reduce, so they can modify that. But I am telling you this question for the purpose of what rate should be taken, the rate applicable to steel. So as if steel is imported, as if steel is imported. This is only in case when the goods imported and converted into finished goods which are used for home consumption. So you can see there. So if whole or part of such goods resulting from such operations are exported, if fully it is exported, import duty to be remitted, means no need to pay import duty. Waste is to be either destroyed or duty to be paid. At what rate duty to be paid? Write down, at the rate applicable to waste and scrap. Duty to be paid at the rate applicable to waste and scrap. Duty to be paid at the rate applicable to, at the rate of waste and scrap rate of duty. Then suppose if whole goods or part goods resulting from such operations are cleared for home consumption, okay, from the warehouse. So then in that case, import duty to be charged at the applicable rate. Okay, what is that applicable rate? Applicable rate, you just remove that, the sentence is not proper. At the applicable rate to waste and scrap means you will think waste and scrap rate. No. So at the applicable rate, the to waste and scrap you remove, applicable rate of goods imported. Applicable rate of goods imported. Applicable rate of goods imported, and this is the example for that. This is the example for that. You can write below, 1000 kgs of steel imported, 14%, and it is converted into 980 kgs of utensils, 12%. It is cleared for home consumption. In this we got a waste and scrap 20 kgs of steel, which is 5%, but whenever it is done as home consumption, pay customs duty on entire 1000 kgs at the rate of 14%, as if the steel is imported. Okay, so this is the example for this to understand. So with this we completed warehousing provisions.